and objective questions based on that. Okay, so what is FDI? Foreign direct investment. Now many of you might be knowing this. What is FPI? Foreign portfolio investment. Some of you might be knowing this because we know the word FII. We don't know the word FPI generally. Okay, so today's topic is that only, and importantly objective questions which come in the exams based on that. Okay, so let's start. Before starting, I always feel that we must start with the motivation or a positive note. So change begins at the end of your comfort zone. Means whenever you leave your comfort zone, whenever you leave your basic laziness, after that you begin to change, you begin to rise in life, right? So always remember this in life. Download Adda 24/7 app on your mobile. Also follow the Officers Adda 24/7 YouTube channel. So you'll get various updates on this app, as well as various banking study material and video lectures on this, live classes on the same app. So tell your friends, share it on the social media as much as possible. Okay, we are starting a new batch of ABM, BFM and retail targeting June 22. Okay, this June 22 exam. Also the batch is starting from March 28th, 6 AM to 8 AM. So timings are also adjusted as per your bank, right? Because after 8 AM you can go to your bank. So this batch will be totally in English. So tell your friends, you also join, share it on your social media. Also the JAIIB batch has already started. LRB, AFB and PPB, tell your friends to join that also who are appearing for JAIIB. Okay, so that is also targeting May 22. Okay, now use this code Y432 for both the batches and you'll get 77% off on the prices. Okay, so use this as much as possible. This is the key to your success. Here, investing in JAIIB and CAIIB is an investment for life, right? Because the increments which you get, double increment for CAIIB and single for JAIIB, that which you get is huge amount compared to what you pay, right? So let's start. Today's topic is FDI and FPI. Okay, so investments. Investment means an increase in the capital stock. Means an increase in the capital stock. Remember the two words, capital and stock. Capital can be what? Through money, and it can be through stock or physical goods also. Okay, for a country as a whole, investment is the increase in the total capital stock of the country. For an individual, investment is the increase in the capital stock owned by him. So basically logic remains one and the same for country as well as for the individual. So it should be increase in the total capital stock of the country, and for individual it should be what is the capital owned by him or what is the money owned by him, right? Money in the terms of not only cash, in terms of property also. Okay, so net investment equals to gross investment minus depreciation cost. So this depreciation cost will come to what? Whenever we talk of depreciation, it's physical goods. Do you feel that these intangible goods can have a depreciation? No. So here we are talking of physical goods only. Okay, so there are two types of investments. Real investment, we call it FDI, or portfolio investment, we call it FPI. We'll study both of them. Economists talk of two types of investments, real and portfolio. Real means basically FDI. FDI means real investment, means an increase in the real capital stock. Now real capital stock means what? You will say only real. What is the meaning of real? See here, in addition to the stock of machines, building, materials and other types of capital goods. So basically what FDI means, if I increase the machines, buildings of any country, then I am doing an FDI. You'll say means what? See here, I'll give you an example. Ford India, Ford car manufacturing company, India. So it has a manufacturing plant in India. So what does it mean? It has increased the building, it has increased the machinery, it has increased the capital goods, right? Hyundai India. Although these all are Ford, Hyundai, these are not Indian companies. But what have they done? They have started their manufacturing plants in India. So that is called as FDI. Okay. Similarly, there are many as such. Okay, even malls, many of the malls, but FDI in retail is not allowed to that extent. So many of the malls, or basically you can see for basically see here, what are we planning? What is the government planning now? Our government is planning Atmanirbhar Bharat, means it's inviting all the countries, all the companies in the world to set up plants in India. So it's basically asking for FDI, not FPI. Okay. Portfolio investment. Portfolio investment essentially means the purchase of shares of a company. So what is the portfolio? Like you purchase the shares of various companies, similarly that the guy who is doing the FPI will also purchase the shares of those companies. Means what? It's simply who does FPI basically? FII. They do the FPI. Remember, the two words FPI and FII are different. FII means foreign institutional investor. Means that is an individual entity. It can be a company, it can be a human being, it can be any trust, anybody. Like we have all those natural and artificial persons, right? So it can be anyone. But that guy does the investment in the stocks of any company. Remember, the stocks or shares basically of any company. It does not increase the machinery or any capital, basically any building, anything in any country. So that is called as FPI. Okay. So understand, there is also an important point in FPI that I'll tell you once in the next topic only, means next this para only. See here, FPI means, suppose if I purchase an IPO comes and I am a foreign institutional investor, and then I purchase the stocks from that IPO. In that case, what happens? So this is the new case which I'll be studying. However, it is only the purchase of new shares issued by a company that can properly be termed as an investment. Means if IPO is given and that is purchased by that FII, only then it increases the capital of that company. Means money wise capital. It's not the stock capital which increases, right? So that company will benefit only when this guy purchases from IPO. Suppose if that guy purchases from secondary market, means from an individual investor. So will that company benefit in any way? No, because that has already issued the shares and it has got the money. So FPI is useful. See here, many a times what happens, we feel that FDI is very useful and FPI is of no use to basically companies. No, it's also useful. But when the IPO issued by those companies are purchased by the FIIs, when the FIIs purchase the stock from the secondary market, then that FPI is of no use to us. Means to the companies basically. Of course, it will increase the stock market prices, it will increase that company's stock prices, it's okay. But practically to that company, it's of no use. Okay. So because the company will use the money for expanding the productive capacity when the FII purchases the IPO, the company's real capital stock will increase. Got the point? Means what? That guy should purchase IPO of that company, FII, only then this foreign FPI is of any use to the country as such or to the company as such. Purchasing of an existing share from another shareholder is not an investment, because in this case the company's real capital stock does not increase. It's as simple. Means if I purchase it from the secondary market, that company doesn't benefit. It only who's benefiting? Only the investor, right? Common investor. So of course ultimately it will add to the wealth of the country only, but directly the company doesn't benefit from that. So now we'll study the distinction between FDI and FPI. FDI versus FPI. FDI is a long-term investment. Means what? If any company comes, purchases the shares, puts the capital investment and starts a manufacturing plant, will that company or will that FII FDI is done not only by any company only, it can be done by FII also. Okay. So will that company or that FII will exit from the country? No, because it's a long term. Will Hyundai car immediately exit from the country? No. Why? Because it has inputted or it has established all the machineries, all the sheds, all the everything, means plant basically, right? And FPI is what? Generally short-term investment. Stock market investment immediately comes, immediately goes. Investment in physical assets, here investment in financial assets only. Okay, means only stocks are purchased, or not only stocks, debentures can also be purchased. Okay, so financial assets, but those can be sold also immediately. Aim is to increase enterprise capacity or productivity or change management control. So in FDI the management control may change. So here increase the capacity. Suppose if some FDI comes in some Indian company, then that person or that company will definitely bring in new machinery that will increase the productivity, right? Aim is to increase capital availability. So only capital availability is increased. Of course the company will use this capital for their own benefit later, right? But when it is used in the, when it is purchased in the IPO, if it's purchased in the secondary market, then this FPI is of no use for capital availability to that company. Leads to technology transfer, access to markets and management inputs. This is very important. Whenever any company comes, suppose Hyundai Motors has come to India for manufacturing. So it has brought in technology also. Now there are various concerns raised by various means basically Indian government. I'll specifically talk of India. I won't talk of any other country. We always, means this specifically this government has always insisted on technology transfer. So this is very important. Once and many companies are reluctant to transfer the technology because it's, after all, it's their patent. So there's always a fight going on between the governments. Okay, in many countries I would say, but specifically India. But then also many countries looking at the market of India. Many companies have agreed. In fact, not many, almost 90% companies have agreed for this technology transfer also. So now that is beneficial for our country. Means what? After let's say 50 years that country goes away, then also that technology will be of exist in India only. Okay, so it leads to technology transfer, access to markets and management inputs. FPI results only in capital inflow, only in money inflows, nothing else. Okay, FDI flows in primary market and FPI flows in secondary market. Now what is this difference here? FPI, if it flows in the secondary market, means from the only it is purchased from the investors, then it is of no use to the company, right? But this FPI, if it flows for IPO, from IPO, then it's flowing in the primary markets. Here this statement FPI flows in secondary market is not altogether correct. FPI flows in primary as well as secondary market, because in primary market it will purchase through IPO, and in secondary market it will purchase through the existing shares only. And here FDI, here it's no primary market, it's basically primary market only, because it is setting up the plant over here. Okay, so it's first hand investment, right? Entry and exit are relatively difficult. That's right. Entry and exit are easy. FDI is eligible for profits of the company. That's right. Suppose Hyundai Motors makes any profits, then Hyundai Hyundai is a Korean company, so that mother company will definitely ask for the profits, gain of profits over here. FPI is eligible for capital gains, because here it's just an investment, so capital gains would definitely be imbibed on them, and then they can take back the money after paying the capital gains tax from India, right? Does not, what is capital gains? Here capital gains tax is whenever you sell any capital. Now what is that capital? That capital can be a property, that capital can be a shares kept for a longer period. We have two types of capital gains, short term and long term, right? We have a separate lecture on that, kindly follow that. Okay, does not tend to be speculative. It's, after all, it's not speculative, because Hyundai Motors or any, I'm just giving an example of Hyundai and Ford. Okay, any company, it can be Colgate India, right? So it's not speculative, it's for it's there for existence and for remaining there for several years. But this FPI, it's generally speculative. So in this, Direct impact on employment and of labor and wages. Of course, means if you start a new company, labor and wages would be definitely employed over here. And here, no direct impact on the employment and wages, right? Fleeting interest in management. Now, fleeting interest means this is something, many of the individuals or many of you might be not knowing this word fleeting. Fleeting means what? When the investor invests in the huge shares of your company, he tries to indulge in your daily affairs. He tries to dictate you. So that is called as fleeting. Okay. Okay. So now we'll go for objective questions. A surge in foreign capital inflow in India would lead to. So if a capital inflow comes, so it would lead to what? Sale of foreign exchange by central bank in order to prevent depreciation of rupee. Number one. Purchase of foreign exchange by central bank in order to prevent depreciation of rupee. Number two. Now this is a logical question. Sale of foreign exchange by central banks in order to prevent appreciation of rupee. Purchase of foreign exchange by central bank in order to prevent appreciation of rupee. Now what do you mean by this? Capital inflow, dollars come in. So the supply of dollars would be huge. Now if there is a huge supply, then what happens? The dollar price comes down and rupee will basically come in premium and dollar will come in discount. So the RBI has to balance this. How does it balance this? So if the dollars are in huge quantity, it will have to purchase. So A and C are gone, either B or D. Now think over it. I'll give you 10 seconds. Okay. Purchase of foreign exchange by central banks in order to prevent depreciation of rupee. Purchase of foreign exchange by central bank in order to prevent appreciation of rupee. Think. Okay. So answer is D. Correct. Why? Because if there is a huge inflow of dollars, then dollar will depreciate. And if dollar will depreciate, the opposite currency means rupee will appreciate. So if the rupee appreciates, you will say it's good. No, it's not good always. So if the rupee appreciates, it's good for the $1 is presently, let's say at 75. If it goes to 70, okay, then it's good for the importers, but it's bad for the exporters. And India is majorly an exporting country. That's why D is the answer. RBI immediately steps in to purchase the dollars. See here, whichever currency is in excess, RBI tries to purchase it. Generally, it's dollars. Okay. 2. Which of the following is not recommendation of Arvind Mayaram Committee for rationalizing FDI or FPI definition? See here, this many of you might not be knowing because it's not there in many books, but it's a part of FDI. Okay, so that's why I've taken this question, and you also need to know this because it was a major important committee which was set up on FDI and FPI. So read this. Foreign investment of 10% or more in a listed company will be treated as foreign direct investment. In particular company, see here, we want not a recommendation. So FDI 10% or more will be treated as FDI. In particular company, an investor can hold the investments either under the FPI route or through EDI route, but not both. So FPI route means foreign portfolio investment, okay, or this it should be FDI actually under the FDI route, but not both. Okay. Any investment by way of equity shares, compulsorily convertible preference share debentures, which is less than 10% of the post-issue paid-up equity capital of a company, shall be treated as FPI. Okay, this was one. On NRI investments in India, the committee recommended treating non-repayable investments as FDI. So, which is the answer? This is very difficult, I know. So, answer is, I'll only give you. Answer is D. Okay, means it was not the recommendation. Remaining 3 were the recommendations. So, remember, you don't have to look at only what is not. What you have to look at what were the recommendations also, because this is also an important question. Okay. What is a global depository receipt? Okay, basically remember there are 2 types of receipt, ADR and GDR. Okay, ADR means American depository receipt, GDR means global depository receipts. So ADRs are issued in US and GDRs are issued where? Now this is a tricky question for GDR. You might have done this in JAIIB also a bit. GDRs are issued in Europe. Okay, so why are they called global? Because in Europe there are many countries they used to consider that those many countries you can invest it anywhere. So the logic was that. So that's why if you can invest in 20-25 countries. So that's why they called it global. So you can use that depository receipt in any of the countries in Europe. So that's why it was called as global depository receipt. So remember, global is for Europe. Okay. So what is GDR? It is a receipt issued by multinational banks on deposit of money. It is a receipt issued by stock exchange to the bank clearing mechanism. It is a receipt issued by overseas bank in lieu of shares of a domestic company. It is a receipt issued by stock exchange on investment by portfolio investor, foreign portfolio investor. So I'll give you 10 seconds again. Start. Which is the one? Think. Okay, I'll answer now. So answer is C. See here, whenever you have to invest in any company in Europe, means you as an Indian investor, so you can directly purchase the shares of that company. Okay, so you can purchase it through what? GDR. In America also, if you have to purchase, buy some shares of some company in USA, so you can directly buy the shares as an Indian. So you'll have to buy it through ADRs. Similarly for India, what is this? If you have to invest in any company of this Indian company, then we have IDR, Indian Depository Receipts. Always remember this. Okay. So this is the answer for C. Next question, both FDI and this FII investment, means basically FPI we are talking of. FDI and FPI are related to investment in the country. Okay. Which of the following is incorrect regarding this FDI and this FI or FPI? Okay. Both, consider this FI means foreign institutional investor. I'll call this FPI because we are talking of investment by this FII. So both FPI and FDI bring capital into the economy. We want which is incorrect. Okay. FPI invest or FII invest. Here now FII is correct because FPI is an investment and FII is an investor. FII invests in technology oriented enterprises where FDI invests in traditional business setups. Okay, means FII invests in technology oriented enterprises. Always FII wants what? Banking, finance, all these, because these, and IT, because these are technology oriented, and FDI tries to invest in traditional business setups. Okay, we want which is incorrect. The restrictions on the entry of FDI are lower than that on FII. Or FPI, you'll call it over here. FDI is considered to be more stable than FII or FPI. FPI can be withdrawn even at a short notice. So which of them is incorrect? Okay, think A or B or C or D. 5 seconds. Okay, think over it. Shall I answer? B. We want incorrect. FII invests in technology oriented enterprises, whereas FDI invests in traditional business setups. See here, FII has nothing to do with this technology or anything. FII has to do with only shares. Those shares can be what? Of technology oriented companies, or those shares can be of traditional business setups like this FMCG companies. Okay, so FII only wants returns, whereas FDI wants not only returns, means he also wants returns, but he gives an employment also, and he thinks of long term returns. Okay, so incorrect one is B. Next, PN, participatory notes, are associated with which of the following? Okay, Consolidated Fund of India. I'll explain P notes now. FIIs, United Nations Development Program and Kyoto Protocol. FII means what? What is P notes basically? Anybody knows? See here, it's like this. Whenever you have to invest in some Indian stocks, basically P notes refer to Indian stock markets only. They do refer to other countries also, but we'll specifically restrict ourselves to India. So P notes refer to stock markets. Okay. Now what do? See here, if I am a foreign institutional investor, if I am an investor, okay, then I can invest in the stock markets through, number one, this FPI, foreign portfolio investment, or there is something called as P notes. The P notes is a bit of a dangerous instrument, I would call it. Why? Because the source of the funds are never means brought forward. Means who has invested in those stocks? See here, it's like this funnel. Okay, there is one single person who is in, there is a single agent or any company who is in between, and here is the stock market. It's like this. See here, this is a single person, and this is the stock market of India, and here there are many sources to this person who all have invested to this into this person's P notes. Nobody knows. Now this person means, I am calling person means it's an entity, it's a company. Okay, if some XYZ companies or institutions have invested in these P notes, and that money is poured into the stock market. Okay, so this is known as P notes. Stock market means various companies, HUL, Reliance, all these companies, they have invested over here. Now the question on P notes which is always raised is the source of these funds, means who has invested in these P notes. That is never declared. That is a real problem over here. Okay, so that's why P notes are always a point of discussion in any government basically. Okay, so that was basically the purpose of today's lecture. These basic objective questions, and explain you the FDI and FII. Of course, there are many objective questions. Some of them we will be taking it in the next lecture also, because everything can't be completed in a single lecture. Okay, so we'll be doing it in the next lecture also. Definitely follow us on this. Also, I would suggest join our ABM and retail branch batch starting on March 28th, 6 a.m. to 8 a.m. 22nd June. This is the target exam. Okay, it's totally in English. Also, we have a new batch of JAIIB English medium, that is legal, AFB and PPB, everything taken into account. May 22 exam, March 7th, it has already started. Okay, note the timings also. You will get a discount of 77% using this code on both these exams. So definitely get it, because this 77% off won't be there throughout the period. It will definitely fall down. Okay, so take the opportunity as fast as possible. Share it with your friends. Also, I would suggest follow our Adda 24/7 channel, Office of Adda 24/7 YouTube channel. There you will get all these updates. Okay, so see you in the next class. Also see you in the live classes for CAIIB.